The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here 11 o'clock till noon every market day, and we're looking at a nice rebound here in the Dow. We were expecting that, my subscribers from opening call, because yesterday we had a Chapman wave trim gauge flashing very high levels, high level of reading, and that suggested that within 2 days there should be, even though the futures were down huge this morning, something like 14, 15 points on the S&P, and the Dow was down about 130, 150. There was a very nice turnaround, and that we expected, because within 2 days after this yellow signal flashes, it suggests that you will get a very sharp rebound in the E-minis, S&P E-minis, which should translate into a move on the upside in the cash indexes, and then later on, you might see a pullback, but at least it gives you that balance that says, be careful. If you're going to short its opening, that could be a big mistake. It's better to be waiting. So, back to the range. Let's look what we've got. We've got the Dow up 78 at 17,870. Yesterday made a leg E, probably a tough E, by going lower yesterday to 17,698 on the Dow, because that monthly arching over. But this is the area of support that we're going to be watching for. There's a circle that I drew last week. We'll see what happens. And now what we're looking at is the S&P, SPX.X is right there. It is trading up 6.43, not as strong as the Dow. That's very interesting. It's at 2091, up 6.5, and it held, so far this week, it's held that red line. It's inside that green, inside track up channel support. That's very important. There's that monthly so far is holding okay. Very important, because if the S&P starts to trade the 2062 or lower area, that's going to be a big negative. So now let's go on. So the parameters we're watching on the day, 2095 is very strong, 9-period expansion. Moving average resistance, we'll see if it's able to get there. A lot. It depends. We've got the cover, the cloud, I called it yesterday, sitting over us of Greece. It's part of the factor. Another part of the factor is that there's a lot of weakness extant, and we're going to be seeing how that resolves over the coming 2 days. You've got the QQQ trading right now up 38 cents. Had a lousy day yesterday. It hasn't been a very good chart pattern, but it's not too bad right now. It's at 108.58, up 37 cents, and it looks like it's, I'd say 108.70 could be strong resistance. Going to watch this real closely, and it better not take out yesterday's support of 108. No, it was 107.31, because if it takes that out, the only thing left is the 107.20 level from the 9th of June, and then it starts to deteriorate. So it's a very important session, I would say. Let me just go to the gold GC. There we go. Gold is having a sharp move to the downside, -8 at 1177. That H pattern, I say the two fighting patterns, but it depends a lot on the dollar, but I didn't see all that much strength left in gold, and that we will just have to see if the dollar is able to move a little higher above the 9-period moving average. And what I'd say is, if the dollar index is 95.08, up 27 cents, it needs to get to the 95.80s. It really needs to get to 96.10 to start making a cup formation to go and retest the recent high in the over 100. I'm not sure about that. Right now, it's just in a trading band, and gold itself is also in a trading band. Looking at, what did it do? Because I'm not at the office, I'm away from the office, I haven't been able to get any emails. At least right now, I'm a little behind, so I won't be able to get any of your questions if you have them for today. So 15.90 for silver, down 17 cents. I wanted to check on high-grade copper, HG. High-grade copper at this particular point is trading down again. This is not good. High-grade copper is pulling back quite sharply. I don't think anything's changed. We're still in a sell mode in the sell mode in the daily charts of the indices, and this is going to be very important how we close the week out for see if we go from a sell signal to a sell mode in the weekly charts of the major indices. So I'd like to also now go to TLT, and that's going to be very important because the TLT is up 14 cents at 118.28. It's holding the 9-period moving average. It's made a candle from the 200-period exponential moving average support in the weekly chart at 114 3/4. It didn't quite get there, and it's bounced with a pretty decent candle from last week, which says if there's a close this week sharply above the 119.07 high of last week, then you have to look to the left side peak or moving average that could become the resistance to look for on the upside. In that case, it would be 121.36. Tremendous support if there is a move above yesterday's candle in the next 2 days without taking out 117.50. To take out 117, you've got that H pattern. You say, oh, bonds have had it for now. And in fact, the yields will start to rally as bonds pull back. Let me go to the. So what we're looking at after that is the euro, EUR, USD. This is the euro currency pair. It's holding the 9-period moving average. It's got the trend line support level that it's held from this morning. That's the line right there. This is a tough one. I would just suggest that the weekly chart has got the H pattern that goes to a lowercase m pattern, and it's in the trading range as well. Let's see what the USD JPY is doing. And then I want to look at the transportation index. Let's say you've got, okay, USD JPY also in the trading range, but actually looks very much like it wants to test the low of last week, which is 120.35, and right now it's 122.30. So that's 123. So 122.45. Right. Okay. Now I want to look at the IYT. Very important to look at this IYT because it was attempting to rally. It's been a decided down move all of 2015. In fact, all the way from September or October. It was November. November made the high, and IYT.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back doing our best here remotely. Sometimes things work really well, and of course we've got such fantastic equipment and everything over at TFN and also back in my office. But you just never know. It's the little gremlins out. It doesn't matter. We're looking at the IYT down 57 cents at 149.97. That is the iShares of the transportation ETF, and what we're looking at is that the little H pattern just keeps repeating over and over and keeps going to lower lows. Not a good sign. So what's very important is that the IYT does not break under 148. If it does that, it's a declining trend line. Let's go to 147. So it's about 3 points from here. If it closes under that, all of a sudden it's in new territory, and that could hit all the way to the low 140s. That's very important that we, this is the opportunity to rally, and it's not doing that. The VIX index is up at 1521. It's down 18 cents. It didn't make a new recovery high, even though the early morning selling was intense. I suspect if the market had opened at that time, we would have been way into the 16s. That doesn't matter, because what's really important is that we're looking at the weekly chart. Remember, I've been talking about this, that the evidence was that the cup formation that was forming, the second cup formation, a much broader one, in the weekly chart, is making higher lows. It is not yet making higher highs. But if this selling, if the nervousness about Greece, and it's really not just Greece, it's so many things we've been looking at, it's a plethora of things. If that continues, and there's a trade that says I'm going over 16.34, the 200-period exponential moving average, suddenly, it doesn't have to be a close, suddenly the weekly chart is looking at, for the very first time, I would have to say the very first time since 2014. Let me see, I'm a little afraid to open this chart. Now I'll open it. Here we go. Yeah, since 2014, that you've had anything that climbed to a leg B, rather than fading at A minus. A minus means that you've gone to a lower low. You've negated the rally. It's that syndrome I call that single leg A syndrome, because it can sometimes fail, and that's what it did. So this is very important for the VIX. I'm not saying it's important for the market. The market is a different animal altogether to analyze. But for the volatility index, it'll be the very first time that fund managers have been putting money in for insurance purposes and to be able to buy some kind of security. And that, to me, says that we've got to be watching and monitoring very closely how the volatility index pulls back today or maybe tomorrow. If this extends for another day, this bounce, I'm calling it a bounce, because I believe we'll be making lower lows at some point very soon. So that also says that if the VIX index at 1521 starts to trade into the 14.60s and then goes, instead of bouncing from that, using the 200-period moving average as a support level, it actually takes out 1430 support. That would say, don't get excited. This is just merely another one of those rotational corrections. They're not going anywhere. The VIX index is going to start going down again, and that would imply that buying pressure in the market is coming back again. But if the VIX starts to hold here, it says be careful. Selling pressure is rife, and that makes the downside support levels in the market very important. I'll just make it real clear. Dow under 17,500 at any point in the next couple of weeks would be very negative. Yes, we've used time, and that's very important in my work because time and price are sometimes exclusive, but if they're mutually exclusive, there are times where they go together. You get the price movement to the downside or the upside, and you also get the time factor. So I'm just trying to give you some sense of what I'm looking at here. Now let's just go to the New York Stock Exchange, NYA.X, and that says it's now the third, 1, 2, 3. This is so far the middle of the fourth week. Now it's into the fourth week of being under the 9-period exponential moving average. A little unusual for the New York Stock Exchange. It has done that before. It did that back in as we crossed over from December to January 2014 to 15, and then it turned that 9-period moving average into a support level. What's really important as I'm looking at it is the daily chart has that H pattern, and there's just a little bit of a bounce here. It's up 0.17%. Meantime, back at the ranch, you've got, let me just double check this, you've got the Dow 0.40 and the percent higher, and the S&P is up 0.20 something. So this is obviously quite an important moment. And there's the music. I do hear it. Thank you to my wonderful engineer, Al, for keeping on the straight and narrow. Basil Chapman, I'll be back. This is the Tiger Technicians Hour.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back, and we're looking at the Dow up in the 70s, up 70-something, 78, and S&P's up 5.5. This is very important because the XLF is at 25.02. It's up 9 cents. Nice candle, actually. Held the 9-period exponential moving average even yesterday after the pullback. We got stopped out with a little profit. I was hoping to be able to keep it, but I just, the more I looked at the financials, the more I thought, hey, they could be just as vulnerable as anything else, and I wanted to tighten things up. But I must say that on the day, I'm looking at the XLF, nice action. I'm looking at JP Morgan. JP Morgan is up 40 cents at 68.40. Nice there because the recent all-time high was at 68. What was that? 68.68, and it's trading at 68.37 right now. Leg E in the weekly chart. So this is going to be an important week. Let's see what GE is doing now they've got rid of all that financial stuff. So they got rid of the financial part of it, just as the financials are holding the best of all. And GE is down 9 cents at 27.12. And as my bellwether, it is suggesting that we should see weakness by tomorrow, at least by tomorrow afternoon, if not later today. And I'd like to just look at the automobile companies. Look, Ford is down 6 at 14.99. GM is GM is up 12 cents at 35.59. Quite nice action considering. Let me just see. So that was a leg D right there, and then a peak D at the 200-period moving average resistance. It pulls back. Yeah, that is good. Let me just see the Fiat Chrysler Group. What did I put? FCAU, I believe. FCAU, Fiat Chrysler, order something. Yeah, not too good. Down 8 cents at 15.43. Oh, wait a minute. That looks like Ford. FCAU. Yeah, that's right. Funny. Wait a minute. This is trading at 15.44, and Ford is trading at 15. Interesting that they're both in the 15s. So, as I'm looking at this, I believe that this is really a spring-loaded relief rally. I'm not sure how long it can go for. My thinking was that it would be no more than a day and a half of rallying. If it did rally today, and certainly it is rallying today based on the Chapman Wave Trend Gauge success yesterday as well, there was a rally of 7 to 9 points off the low of the session, but it didn't turn into a very positive session. There were moments that looked good, and then it just kept sinking. So all I can do is say, I'm watching the VIX. Let me just go through that one more time, because now it would be the time that we're starting to slide. And it is, no, it's holding quite nicely right there at 1525. Watching to see where it closes. The close below yesterday's low, okay, that's not a big deal, because if it closes at 1490s, trading at 1526, that's not too bad. But if it closed very sharply down, and the market from here gained another 50, 60 points on the Dow, another 6 or 5 points in the S&P, that would suggest that this rally could go just a little longer before we start to test the most recent lows. So looking at that, I also want to look at crude oil, because people keep asking me about crude oil. And crude oil, I believe, is in a trading range with an a high-level trading range involved. So let me just get to the crude oil right now. It's trading up 34 cents. There it is. See, I want to look at the weekly chart, and I could do this. You're not going to see it that well because it's come down so sharply. But if I was to change the parameters, let me do this. There you are. So that's a much wider trading range visually, because you're talking about getting up to the almost the 64 level and getting down almost to the 56 level. Now you've got yourself 6 to 8 point trading range. That's different. But when I do this, it doesn't look like much. When I do that, it looks And that's exactly what we're looking at. You're in a trading range, and it really is until you really pierce one of the levels. And the pierce on the upside would be 64.80. So 59.87 right now. Needs another $4 or $5 higher to really say, I've broken out. I'm making an even larger arch formation. That's going to be very important. So that's crude oil. And when I'm looking at, I want to look at the UNG, because I was asked about that. The UNG is holding well. So at this point at 1370, down 24 cents, it would start to negate any strength by, it doesn't even have to close it. It just has to pull back under 1347, and that'll be a big negative. And so far, the weekly chart is just saying, hey, this is a bounce. So we can only treat it as a bounce because the patterns are forming so many H patterns that retrace to the bottom that I have to think it could happen again. I wanted to also look at Amazon, AMZN. Reason being, Amazon also became a stock stuck in a trading band, and that trading band is suggesting, based on the weekly chart, of a rectangle formation, and the rectangle formation says at 425.64, up $1.97. That's okay. It's not great at all. But what's really important is that it's got tremendous resistance in the mid to low 430s, and it's got some support in the 420 to 419 area, but a close below 418 in Amazon. This is what I'm looking at that makes me very concerned about the intermediate term. That we are looking at so many of these stocks that at best could go sideways, but at worst, if they break the recent key support level, and for Amazon it would be that 419, 418 area, that's going to be a negative, a big negative. Look at Google, G-O-O-G. Trading in also the same kind of a band, and then all of a sudden it starts to test the lower level. Look at this. There's the daily chart, makes an arch formation, makes a smaller arch formation, and each time it says at 526, I'm really wanting to test the 523 to 5, very important, 521 area. In Google, a close. This is not Google L or whatever it is. It's this GOOG, trading down 51 cents at 526.69. Not good action at all. MACD is not good. Stochastic's not good. It suggests that Google wants to go to the 5 teens, into that 519, 515 area, and it wants to do that probably in June. I don't think it has time to waste. It's really got that look about it. All right. Now I also want to look. I want to look at Exxon. I want to look at Exxon because this is the biggies in the oil, integrated oil. And it really is important. I had been looking at the other day, talking about the H pattern, which was an inverted V rally in the weekly chart. It's trading at 84.10, up 38 cents. If Exxon takes out 82.68 in the weekly chart, that's okay if it rebounds quickly. But if it takes that out and then pulls back further for 2 weeks, that would suggest to me that the integrated oils are in trouble because Exxon, the biggie, will be making a very large arch formation in the monthly chart, and that suddenly opens the low 80s. I don't want to talk about the low that was made back on the in June of 2012 at 77.13. I just want to go step by step and say that the Roman candle of March in the monthly chart with a low of 82.60, 82.60s, that's going to be really important. So I think I've covered a couple of spectrums here. Now this is going to be very important. In the IBB, there's been a bounce, and the bounce keeps failing. And I'm suggesting that the IBB, which is the iShares of the NASDAQ, the biotechnology ETF, trading at 364, up 36 cents, had a high today of 365.54. My suggestion is that if you are in the biotechs, they've been such big winners for so long. I don't want to just say to you, hey, be careful. What I want to say to you is, this is a period where you might want to consider that lightening up a little bit and then perhaps preparing to put that same amount of money back into the IBB if there is a pullback towards the 357, 355 area, because that's where you will start to think about putting it back. Why? Because it closed below 357 into the 355s. If there isn't an immediate rebound, it would suggest to me that we've got an arch formation in the weekly chart, the one that we're very familiar with, and it could start to come down, and it could even go back into the very ugly October candle, that candle that went. Let me just see here. Oh, sorry, I meant the May candle. I'm looking at the weekly chart. The May candle that had a low of 330.60. And that was a very important takeoff from there. But it's getting harder and harder. You see the MACD, the weekly chart, stochastic at 78 under the 80% level, MACD deflecting lower. This is going to be very important what happens at the close this Friday, because the way it's acting right now, it's not responding or leading. Now, this is what happens very often with the IBB. The day of a huge move up in the Dow and the S&P, the IBB doesn't do much. And then the very next day, or late that afternoon, it starts to play catch-up, and the very next day, it has a very big move. If tomorrow the IBB at 364 is not trading in the 369 to 370 area, but instead is actually down on the session, that's going to be a heads-up to say, change of character, and that's going to be very important for me. So that's how I want to look at that. I wanted to look at a couple of the gold stocks because I had questions about them. For instance, GG trading at 1635. This is gold core. It's not a good chart. And I keep talking about it and saying it used to be a big winner, and then it was a loser, and then it came back to being a really big winner, and that was that move going to the 2011 high at 56.31. Well, look, it's trading now at 1636. Don't you think 56 to 16 says there's a problem? They have a very serious problem. So gold core, and then you've got Royal Golds, which should be doing well because it's basically just a venue for taking in money because they're a royalty company. And right now, it is making an arch formation in the weekly chart, and that weekly chart says at 63.05, down 49 cents, and we made a high of 100.71 back in 2012. It's funny how they all rotated and had different highs. It's got that arch formation that says, hey, be careful, because there's a very good chance that if the 61 to 60 support starts to fail, that in fact Royal Gold will trade and test that candle right there. That's the Roman candle of the week of March the 13th, and that's the weekly candle RGLD, trading right now down 49 cents, but it hasn't yet broken any of the supports that say it's going to go into the wick. But certainly at under 61, that wick just starts to loom as either support in the in the 60 area, but if it goes to 59.50, it's probably going to retest the low. So that says that Royal Gold, a good example, has to rally within the next week or two, and it has to rally quite strongly. It has to rally from 63.16 into the 64.60s. Really has to get above 65 to show that, no, I'm not going down. I've changed my character. I'm going to the upside. At this particular point, I still think that the dollar has enough influence, maybe not strength, but influence on gold to say, gold, you're not going anywhere right now because we're at least holding. So it's going to be very important, and I'll go to the GLD because I often get asked about in the GLD. The GLD trading right now at 113.16 is showing that pattern yet again, that cup formation, the arch formation, the lowercase m, and the weekly chart is suggesting we've got a little mini M unfolding right here. Wow, let's make it this way. Okay, and it says the GLD support has to hold 112. If it starts to take that out, you're looking at 111.57 as really being very important support. And in fact, the SLV, which was acting very well for 2 days, gave it back today, and it's trading at 15.29. That's what I was talking about yesterday. It wasn't my favorite vehicle. It wasn't my favorite sector. But at the same time, it did have a good candle, but it needed to hold above that 15.44 area to hold above the 9-period moving average resistance, to act as support rather than resistance, and it's failed to do so. So the weekly chart just has that H pattern that goes to a lowercase m. Just over and over, these patterns repeat. All right. Now, I wanted also, if there was opportunity today, to look at Disney. Why Disney? Because Disney has held the 9-period exponential moving average. This is really this. I'm not sure if the summertime is the season of Disney in terms of their theme parks and all, but definitely they're not hurt by it. There isn't snow and all that stuff that's interfering from other places where people can't travel, can't leave the city because of the snow. So right now it's acting well. It's up 73 cents at 110.91. And that says to me, keep an eye on Disney because the rectangle formation that's forming, let me just move this rectangle up to this area here, in the weekly chart has held the 9-period moving average. The monthly chart is still very good, even though there's a doji leg. We'll have to watch the close. Meantime, I do hear the music, so I won't go on. I'll wait until the music comes back. But Disney above 110.96 starts leg B. Basil Chapman, Tiger Conditions Hour. Dollars up 75. I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi everyone, we're back. Basil Chapman, Tango Technicians Hour, and we've still got the Dow up in the up 70-something, 73, S&P's up 6. This is going to be very interesting because Disney is just a fraction away from making leg D in the 120-minute chart, leg B in the daily chart. The MACD's turning around. The stochastics rallying, but not that great. What's really important here is that it has held very well in this whole consolidation, having gone from the 111s down to 107, only 4 points, not a big deal. But what's also important is that in terms of leadership, Disney, having made all-time highs just recently, has absolutely been a Dow leader. And if you look at my Dow quartet, GE, we spoke about GE just now acting very, very poorly. IBM should be bouncing today. It's up, it's not, now it's down. It's down 2 cents at 166.24, very poor action. Look at Triple M, the third of my bellwethers, is only up 47 cents at 156.34. And UTX, another bellwether, G is the short-term bellwether, intermediate term is the UTX, and that is making that H pattern in the weekly chart. That is a classic. Look at this. It broke the support that I'd drawn in a few days ago when I was looking at the Dow quartet, and it said that the daily has already made an arch formation, and it gave away for that support level that was just underneath, where am I, 116.02, and now it's down in the 115s. And the 120-minute chart said, yep, it could rally, but UTX, a weekly chart, has got this very classic pattern that I call the H pattern that comes down, tries to rally, makes an arch formation at either a peak A or a B, which becomes A minus or B minus. If there's a test and a break of the low of 113.29, that's going to be very poor action, and this is one of my leaders. So I'm looking at this askance and saying this rally is just merely either a short covering rally or a news-related bounce type thing. And I don't see the leadership. So Disney is, in fact, a leader. What is Merck doing? Merck was leading, then it started to fail, and now it's down. It's not good. It's up 16 cents at 57, but it's in that H pattern as well. in the weekly chart, and the monthly has got a peak E. I'm going to be watching this one real closely. How about we go to a different sector altogether? Let's go to Yahoo. Yahoo is, there again, there's that H pattern that fails. This is just too familiar, and that's the reason why I'm looking at the sell signal going to a sell mode at some point really soon in the weekly chart. And even Home Depot, which has just been a stalwart, it's been an unbelievable winner going into the first part of 2015, has kind of stalled out. And if this pattern is going to repeat, you'll get your A minus right there if Home Depot at 110 in the next 2 or 3 weeks starts to take out decisively the 106 very important support. So that's the reason why I'm looking at this and saying, hey, something's going on here that ain't good. The home builders, that's the Philadelphia Housing Sector Index, up 25 cents at 228.71. I'm looking at this as well and saying, geez, how many times am I going to be looking at this H pattern? So the home builders needs to go from 228 up into the 234 area to really show some kind of strength that is pliable, that is able to generate even higher highs to retest the recent recovery high back at 237, was it? 238. So all in all, you're about to go on the next break. It'll be the final break for me, and you'll be going to the options hour. Always a wonderful show from Think or Swim, and I'm not sure who's on today, but as I'm waiting here to hear the music to sign me off, I hope I managed to salvage the show by getting a phone that was working. My earphones, I'll try to do that the next time I'm on and have everything set up properly. But in the meantime, back at the ranch, my opening call, where we have short positions. Actually, we're now sort of out of long positions.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.